Radio Talk Online with your host, Melanie Fine.
This is Melanie Fine at Radio Talk Online. Today we're talking with Richard Weintraub of Union Bank. Welcome, Richard.
Glad to be here. Thank you, Melanie.
You're welcome. So tell us what you do as a mortgage consultant for Union Bank of California.
I'm involved in all aspects of real estate loan generation and origination, from inception to funding. I provide services for purchase loans, for refinances, and I handle anything from single-family residences to condominiums to any 1 to 4 unit residential property, and we handle primary homes, second homes, and investment property.
And how did you get started in this industry?
Oh my. About 20 years ago, I received a phone call from a company that wanted to recruit me into the industry. I knew nothing about it, and I answered a strange call and drove into Los Angeles, and I started out in the subprime industry doing loans for credit-challenged folks about 20 years ago, which ended up becoming a huge business for many, many years, which actually all came apart during the debacle during the 2008 era where things fell apart. But from there, I ended up basically doing that for 3 or 4 years, and then I went out on my own, and I was an independent lender out in the desert area for approximately 13, 14 years. And I did that straight up until around 2008, 2009 when we had carnage.
Mm-hmm.
And then about 3 years ago, I joined Union Bank so that I could be part of a strong, reputable company with a 100-plus year history and, great assets, great name, and a great reputation.
So tell me, I hear stories about, well, I guess over the past few years, how difficult it's been to get a home loan. What's the state of buying homes in the Coachella Valley? Is it still at the bottom, or is it peaking up?
Well, real estate has surged greatly. Certainly, the first 2 quarters of 2013, I think it's far exceeded the expectations of some of the prognosticators and economists out there. I think that they were all predicting 2014 would be the year that we'd see an uptick, but this year has been very, very strong. As far as the state of loans and obtaining loans, it's become much more of a black and white industry. It used to be that you could, fill out an application with almost any information and find a way to fund it. And today it's very simple. You either qualify or you don't. It's not a matter of are banks lending. Banks want to lend money. They want to do mortgages. We want to stimulate growth and excite the economy, but you have to qualify, which means you have to have the proper credit, the proper income that can be documented and proven traditionally via tax returns. And you certainly have to have the reserves and the assets to sustain the underwriting guidelines of today's loan commitments. So, things are good overall. I'm not sure if they're as corrected as the media might play them out to be, but we're definitely noticing foreclosures are lower. Short sales have definitely, become a little bit lessened. They're still out there for sure, but certain government programs have come into place which have taken care of some of the foreclosure problems. Home construction sales and prices have been growing, since early last year, and I think that across the country we have definitely bought more new build homes at a much faster pace than we've seen in the last 5 years. Housing and autos that's what's growing the economy right now. So I'm excited. I think it's a good time. I just think we have to still be, cautious.
Cautious. So loans are still they're more loans are being made now than there were over the past few years, but still they're very conservative, you're saying.
I'm not sure if conservative is the right word because it's much more mainstream today. It's just the thought process behind it. And one of the things, too, that's occurred is that borrowers have become much more aware and educated as to what's involved in obtaining a mortgage loan today. It's not just a matter of, I have the equity and my credit's good. Those are definitely two viable, attributes of a loan, but it's more. It's all the pieces of the puzzle have to fit. If they fit, it's not a problem. It will go through and you will become financed. but you do have to have all the variables, and that's the big difference in the challenge today versus yesterday's type of lending and philosophy.
So the variables being credit score, being proven income. You also spoke about assets. What about like first-time home buyers that are just starting out that probably don't have assets other than their paychecks?
Well, most lenders and most government-backed programs are going to require at least a few months of what they call PITI, which is your principal, interest, taxes, and insurance. Those four things together will make up your housing portion of your income to debt ratio. And it's important that you know going in that you're probably going to have $4,000 or $5,000 in some kind of liquid asset, whether it's in savings or whether it's in checking. Some forms of retirement accounts are acceptable. Most people who are buying a home today are pretty prepped for that. They're aware that they're going to need some kind of asset or reserve money to qualify for a loan. I usually don't have a problem with that. I don't see that being an issue much today. People, like I said, they're more aware. They do a little more homework, a little more investigating before they go out and start looking at property.
Now this. I mean, it's not a very large cushion, $4,000 or $5,000 cushion. That's in addition to the down payment?
That is correct. And again, this is all based on the size of the loan. I mean, certainly someone who's trying to qualify for a $200,000 loan versus someone qualifying for a $2 million loan, you're looking at, it's all commensurate to the loan size.
Right. So someone going in to get a home loan, is it standard that they put down 20%? Is that still the rate, or am I off?
No, 20% is definitely, the standard down payment for most programs available today that would certainly have the best interest rates. When we talk about 30-year fixed Fannie Mae, which is the common language today, most of those programs are 20% down programs. I mean, certainly there's other programs that are available. An FHA program, which is a federal house, it's a government-backed program, will allow you to put 3.5% down. There are certain restrictions on programs of that nature. There's specialized programs out there that will allow 5% down. But typically the norm is certainly 20% down.
So 20% down, but there are some FHA loans, and those, what are they, first-time home buyer loans?
Not just necessarily first-time home buyer. There's other programs available for, you don't have to just specifically be a first-time home buyer to be able to obtain financing that would be more than 80%.
Mm-hmm. Okay. And what are I guess obviously the rates, the interest rates of loans depends on a number of things, but what are the ranges these days?
You mean what are the ranges for interest rates, or?
Yes.
Any specific program, or you just
in general?
Just in general.
Is it that wide a range?
Well, it depends on what you're doing and, what kind of a loan you're doing. If you're talking about just a general 30-year fixed, today, they're certainly higher than they were if we were having this conversation 6 weeks ago. But
oh, really?
We had quite an increase over the last 6 weeks. Now, they have stabilized since, but you're still looking at rates that probably are somewhere between 4.5 to 4.75 with regard to a 30-year fixed, and maybe somewhere between 3.75 to 4% on a 15-year fixed. When we start talking about these interest rates, it's very difficult to do blanket quotations because there are so many variables with regard to the loans today. On these 30-year Fannie Mae, what they call a saleable product, something that's actually packaged up and sold as a security on the open exchange. These types of loans have variables. They have variables for the loan to the value of the property. So if you're financing, say, more than 75%, there could be an executed change in price for that. If your credit score is less than 680, there could be a change in the price for that. If you're pulling cash out, that could change it. If it's a second home or if it's a investment property, that will have an effect on the pricing. What I'm giving you then would just be your general standard basic, primary homeowner doing it on the primary residence. with most of the things assumed. Good credit, good income, good assets. At Union Bank, we have a portfolio which I believe to be quite unique, and one of the reasons that I'm really excited about being at Union Bank, because our portfolio is not a government-backed product. It's not something sold on the market. It's kept inside the bank. We fund it, we service it, and we write the guidelines for it. And so therefore the pricing is much more unique and much more tailored towards the borrower. We don't have those tiered limitations or expectations with regard to the credit score and the loan to value and the cash out. Our price is the same on the loan from the first dollar to $4 million. And that is gives us a lot more flexibility, and generally it makes it a lot easier for the consumer because they don't have to factor all the variables into their pricing. It's been very successful, and the whole idea behind a portfolio being that it is kept in-house, I think people really like that. They feel much more comfortable knowing that the loan is being written by the bank, being serviced by the bank, being held on to by, you become part of the family of the bank.
So that's you actually. So you're talking about one of the advantages of obtaining a loan through Union Bank. What would other advantages be?
Well, I think one of the most important things, besides our portfolio, is we have a lot more flexible underwriting due to the fact that we control it. We look at each individual deal, and we're able to make good decisions based on the strength of the deal and the strength of the borrower. Everything we do is local, so the processing of the loan, the underwriting of the loan, and the funding of the loan take place on a local basis, with me being a single point of contact. Quite often when you get involved in loan scenarios with some other companies, bigger companies, big banking institutions, your loan could be in Kentucky, it could be in Florida, it could be anywhere across the country, and you might not be working on the same time zone, and that could be frustrating from a consumer level because you're not able to reach anybody, or you're sent to an 800 broadcast center where you're
on hold for 20 minutes.
Yeah, your call is tossed around. I mean, I like the local flavor of what I do. I'm here, and I answer my phone, and I'm transparent. I'm available. You can find me. I think that's a huge advantage for folks doing what I consider the most important transaction of their life, whether it's a purchase or a refinance. I don't care how many times you've bought a home or been in a home or done a loan. Each loan is unique and should be tailored, and it should be treated that way. It should be an intimate process. So I think that there are many things that keep us strong and keep us vital, but this is definitely one of the most important things, having a local contact, a single point of contact, as I like to refer to it. I think it's a huge benefit.
It sounds it.
We also have, the other thing is, I have a couple of unique programs within our portfolio that I don't think are offered. They may be offered in other variations, but I think that we've really kind of narrowed in on what we're good at, and we're really great at what we're good at, and I think that that's important. That you don't try to be everything to everybody, try and carry every single product under the umbrella. You try to just do what you're really good at, and if it fits for the client, they're going to be happy, and the bank's going to be happy, and it's a win-win situation. Right.
Now I know that a lot of homes in the desert area are second homes, vacation residences. Do you do as much financing for second homes as you do for primary residences?
Yeah, I do. As a matter of fact, that's a good point. Many of a huge proportion of my business is second home, and we're fine with that. I mean, we treat second homes almost identical as primary. It's not really an issue for us out here. We basically have the same guidelines and same policy, and the loan to values and the limits, etc., and the rates are all pretty much the same. There's a slight variation in an interest rate on a second home as opposed to a primary home, but we're talking about maybe 1/8 of a percentage point, and typically it doesn't amount to a great deal of money.
Right, and I imagine 1/8 of a percentage point higher.
Right.
So,
right.
Yeah.
Yeah. No. So yeah, I mean, if the rate's 3% on a primary, it's 3 1/8 on a second home, and you're not talking about a big variance there.
Right. I was told by some realtors that a number of people who buy second homes here actually buy buy them with cash. So it's interesting to find out that a lot of them are financing their homes.
Yeah. Yeah, I've heard the same thing from a lot of the realtors, is that cash is really king. I mean, maybe it's the investor types or the type of people that are waiting to buy a second home. We're sitting on the sidelines with cash, and they are coming out. I'm hearing stories about bidding wars on properties. 15 people showing up on the day that it goes into the multiple listing service, and it's the person with the cash that's buying the house. Now, what's interesting is I have a product that is really unique and is really, really, really slick when it comes to this type of behavior, where if you buy a home and you pay cash so that you can close quickly, you can come to me and I can refinance that house immediately, and I can pull out typically 80% of the cash that you put in to recover your investment. A lot of companies and a lot of banks across the country that I've heard of, you have to wait 6 months or even a year to be able to do that. So that's a huge benefit. I have a program that will allow that. So cash is king, but there's always ways of doing. Look, we're all trying to finance as quickly as possible, and that's another big variable. Is when you go into an escrow, you want to be able to close within 30 days or within 21 days if possible. And we're able to do it as long as the proper thing is that you have to vet the file and vet the client's qualifications up front and be ready to go, so that you're not losing time at obtaining all the documentation necessary for the loan. So it's just a process. If the process is done quickly and efficiently, it can all go very smooth. It doesn't have to be the worst thing in the world getting a loan. Certainly I've heard the horror stories, and I know everybody else has. I'm not going to sit here and represent that it's the easiest thing in the world, because it certainly isn't. But again, it all comes down to proper vetting of the file and making sure that you have everything you need up front. It's funny, sometimes I'll give a list of documentation needed to a client, and it's daunting, and they'll gasp, that's for sure. But like I always tell them, if you give me what's on this list, you should have a seamless transaction. And it's interesting. It's the little details that make the difference. If you have an 8-page bank statement, and you give me pages 1 through 6, and you threw away 7 and 8 because they were blank or they had rhetoric type writing on them, I need it. I need 7 of 8 and 8 of 8, or the underwriter's not going to accept it, and it's going to stall the transaction. It's the small, bothersome, gruesome details that clients and borrowers, they want to resist, and the more you resist, the longer it's going to take, and inevitably I'm going to need it, or I wouldn't be asking for it.
Right. In other words, do the red tape.
Yeah, follow the list, do the homework, and it should go okay.
And everything will be fine.
Yeah.
So what should a home buyer, or actually I haven't even spoken about refinance, someone who wants to refinance, what should they look for in a home loan, and what should they be wary of these days?
Be realistic. Make sure going into it that you know what the value of your home is versus what the loan on it is. That's one of the biggest frustrations of today's modern lending era, is that we're unable to assist in trying to really tell you what the value is and if you're going to qualify with the loan to the value. It used to be that we would call an appraiser and get some idea of the value of the home for the client, and then we could make a good decision whether to go forward. Today, it's not like that. Today, the client actually has to apply for the loan, go through the application process, in some instances maybe pay an upfront fee or an application fee. Appraisal is ordered. Appraisal is performed. If that appraisal doesn't come in at a high enough value to do the loan, that's it. The loan's over, and quite often the client's unable to recover the initial investment. And that's one of the challenges of refinancing today, is go in with eyes wide open. So that would definitely be the top of the list, to make sure that you have a pretty good understanding of what your value is, and that you will qualify at an 80% or less loan to the value. And then again, the second thing was, again, this goes back to my original philosophy with the educational piece of the borrower today, is that they just know more today whether they qualify. And that's important, when you're talking to a customer. you have to know what your credit score is, and you have to have a good understanding of can you provide the income documentation necessary. Whether it's a purchase loan or a refinance, it's basically the same. It's the income, the assets, the credit score, and then the loan to the value of the property. If all those things are there, it's not going to be too difficult.
Well, thank you very much, Richard. This was very enlightening to me, who knows very little about money and percentage rates and stuff like that. I'm really good with numbers, but if you put a dollar sign in front of it, that's it. Most people are the opposite way, but for me,
well, the irony is that it's like anything else that you would shop for, or that you would sit down to investigate whether you're going to do it or pull the trigger for the purchase of any item. It's feeling comfortable with the person that you're doing the business with, and that's one of the things that I try to always advocate. Make sure that you have some kind of relationship with who's writing your loan. Feel good about who you're doing business with. Meet with them if you can face to face. I try to do that. That old-fashioned face-to-face. We've become so, behind the screen with going online and putting all this sensitive information into a computer and waiting for that magical quotation to come up. And I'm sure that those are integral to the system. But to me, it just seems, boy, if you can get face to face with somebody, shake my hand and look me in the eye, and we can tell a story or two about our kids or about our families, and we get to know each other, so that maybe even during the transaction, if something does go awry, you still know who I am, and maybe you can trust in that I am on top of it, and I am going to be able to fulfill the obligation. So it's an old-fashioned way of looking, but that's how my father did business, and yeah, certainly the internet is important and a viable tool, but boy, I tell you, nothing replaces a handshake and a smile.
Everything, even with the internet today, everything eventually boils down to a relationship between two people.
Yeah, I totally agree with that. I think it's real important.
So thank you so much for being on the show. If our listeners wanted to get more information about you or get in contact with you, how would they do that?
My direct office line is 760-862-4769. And if that doesn't work, my email address is simple. It's richard.weintraub, W-E-I-N, T as in Tom, R-A-U-B as in boy, @unionbank.com.
Excellent. The man with the money just gave his direct line to us.
No problem. I welcome any calls.
Wonderful. Thank you so much for being on the show today, Richard.
My pleasure. Thank you for having me.
You're welcome.